Hashtag Trending would like to thank Meter for their support in bringing you this podcast. Meter delivers a complete networking stack, wired, wireless, and cellular in one integrated solution that's built for performance and scale. You can find them at meter.com/HTT. Merriam-Webster's word of the year is slop. A near collision occurs every 22 seconds in low Earth orbit for satellites. Oracle, Broadcom, and other infrastructure stocks take a plunge, and Amazon patches a critical Kindle vulnerability just in time for my book to get out at Christmas. Welcome to Hashtag Trending. I'm your host, Jim Love. Let's get into it. Merriam-Webster chose slop as its 2025 word of the year, pointing to the flood of low-quality AI-generated content that's saturating search results and social feeds. The term now commonly refers to digital content produced in quantity by artificial intelligence that is shallow, repetitive, or little more than filler. Across the Atlantic, Oxford University Press, the publisher of the Oxford English Dictionary, had declared rage bait its word of the year for 2025. And rage bait is defined as online content deliberately designed to provoke anger or outrage, typically to boost engagement and traffic. The term's usage reportedly tripled over the past year, reflecting how often emotionally charged posts now dominate social feeds. Taken together, these two choices say a lot about life in 2025. First, the sheer volume of AI-generated media, written articles, videos, summaries, posts. All of this has made it harder to find authentic, thoughtful content amongst the noise. Second, the content that does cut through this overload is often doing so not by informing or entertaining, but by triggering strong emotional reactions, a lot of anger and rage. These dictionary picks aren't just linguistic curiosities. They're cultural mirrors. Together, they reveal an internet and a social media structure where quality is drowned out by quantity and where emotional provocation pays better than substance. That matters because this shapes how we think, what we talk about, and increasingly what we feel when we log on. In 2025, it looks like the words that define our digital lives are as much about what's wrong with the web and our society as what's right. We did a story yesterday about a newly launched Chinese satellite that passed within a few hundred meters of a Starlink craft. SpaceX says the object came within roughly 200 meters of its Starlink 6079 satellite at speeds of above 28,000 kilometers per hour. I'm doing the rough calculation in my head. I think that's about, if I remember, about 17,000 miles per hour. All without prior collision avoidance coordination. But with very little digging around today, we found this near miss wasn't an isolated drama. A new analysis of the low Earth orbit environment shows the system is dangerously crowded and fragile. According to researchers, satellites on mega constellation paths, including Starlink, China's Guang, and other emerging networks, experience close approaches with other objects every few seconds. Across all constellations, a close approach, defined as objects passing within less than a kilometer, happens roughly every 22 seconds, with Starlink alone averaging one every 11 minutes. This matters because every close approach needs active avoidance. Satellites carry fuel and automated systems to maneuver when they know another object's trajectory, but untracked or uncommunicated objects in orbit complicate this system. When that control is lost, for instance during a powerful solar storm that disrupts navigation systems, some models suggest that truly catastrophic collision could occur in as little as 2.8 days. That's down from an estimated 121 days before the mega constellation era. A single high-energy collision in orbit can generate thousands of fragments of debris. Those pieces spread out in intersecting orbital paths, increasing the risk of further collisions in a cascade effect known as the Kessler syndrome. Once underway, that debris cascade could make large swaths of low Earth orbit effectively unusable, disrupting communications, GPS, Earth observation, climate monitoring, and perhaps even crewed missions. In practical terms, that's the worst-case scenario, and space planners hope to avoid it. An event that doesn't stay in orbit but instead reshapes the whole orbital environment. And it's not alarmism, it's a reflection of how rapidly orbital traffic has grown, how many operators are now involved, and how little global coordination exists today to manage a space traffic system that's becoming as crowded as an urban freeway at rush hour. We've heard a lot about the AI bubble and how stock valuations are too high. And a sell-off is happening in AI-linked stocks, but it's infrastructure names that were hit in a host of large declines on Wall Street this week. Companies that were riding an AI investment wave have seen their share prices fall as investor enthusiasm has cooled and concerns about debt, profitability, and execution have sharpened. Microsoft took a bit of a beating earlier this month when demand for its AI products fell short of targets, but it's the infrastructure providers that are taking the biggest hits this week. Broadcom, a major designer of custom chips and networking gear tied to AI deployments, has lost significant market value in recent sessions, with its stock sliding sharply despite solid revenue and good guidance. Oracle, another big name in the AI infrastructure build-out, has also seen big declines. After missing revenue expectations and announcing higher AI data center spending, its share price has weakened substantially. And at the smaller end of the spectrum, CoreWeave, a cloud provider that specializes in renting out NVIDIA-powered machines to train large AI models, has been one of the hardest hit. Since its March IPO, it has now dropped to about half of its mid-year peak, as investors question the sustainability of its growth model, high debt levels, and its reliance on a handful of big clients. These moves show a rising nervousness about how the infrastructure of AI will be financed. IBM's CEO did a famous back-of-the-napkin calculation we covered a few weeks back, and he declared that it was going to take more than $800 billion in annual profits from AI to pay for the expenses, including the infrastructure needed. And companies that must borrow heavily to build data centers or push custom silicon are exposed, not just to worries about whether the revenue will appear, but also to rising interest rates and tighter capital conditions than software or service-oriented parts of the AI ecosystem. And while enthusiasm for AI has driven some of the biggest rallies in markets this year, there's a growing conversation in investing circles about whether parts of that rally were overdone, a potential AI bubble in which valuations might have gotten ahead of actual business fundamentals. I'm not an investment guy. I don't offer advice. But for listeners trying to make sense of this in simple terms, enthusiasm for AI is still real, but the betting has shifted. Investors appear to be saying that not all bets are equal, and the capital-intensive companies building the physical guts of the AI world are going to have to prove that they can deliver profits before shareholders will come back in force. For me, I can only quote the advice that I gave during the dot-com bubble. A bear makes money in a bear market, a bull makes money in a bull market, and a pig loses in both. 'Tis the season to be cautious. This year, mostly on our sister podcast, Cybersecurity Today, we've done stories about unique ways that hackers attack us. Almost everyone knows that phishing attacks are rampant in December when everyone is rushed and likely we're about to click on something that we shouldn't. And we all know that Amazon is one of the companies that is most used in phishing, and hopefully most of you are not clicking on links that come from Amazon that you don't understand. Hopefully you're keeping a really close watch on what you're doing. And those delivery emails, whether they come from Amazon or someone else for parcels you didn't order, hopefully you're not clicking on those links. You have to take great care. I try to never click on a link that I'm not 100% certain of. I'll read the link, or I'll go to the site directly. I'll definitely not copy a link and paste it anywhere inside my browser window, or any text for that matter, unless I'm absolutely certain of it. But if only it would stop there. We did a story a few days ago about how malware can hide in shared movie files, torrents, and slips past endpoint protection because the attack doesn't always show up as an obvious virus or malware in the file. So that friend who sends you a torrent video of the latest movie, just say no. Not only because it's illegal, but because the movie could end up costing you more than the tickets and the popcorn. But now these hackers have gone too far. Forbes is reporting on a confirmed Kindle vulnerability that security researchers demonstrated at Black Hat Europe, showing how a specially crafted ebook file could be used to compromise a Kindle and then pivot into the user's Amazon account. The key point is the attack starts with content you might treat as harmless, a book file. The risk, as described in that reporting, is that once an attacker can get code running through the way a Kindle processes a file, it may be able to extract data tied to the account session and use it to get deeper access. In plain terms, it's not only the device that matters, it's the ecosystem behind it: purchases, personal data, and any payment methods attached to the account. Now, thank heaven, Amazon has issued fixes, so the obvious move is the boring one. Make sure your Kindle is up to date and keep it updated. And if you sideload books, be picky about your sources, because the whole premise here is that the book is the new delivery mechanism. And that's our show, our last daily news show of the year until January 5th. And what a year it has been. The news has come at the speed of a runaway train. I've tried to stay in the tech end of the news and out of the political and all of that, but it's impossible to totally ignore it. I do hope, though, we've provided some respite. But even a lot of the tech news is troubling. Like many quotes you hear from the internet that are not true, "May you live in interesting times" is not a Chinese proverb, but it still seems appropriate. But my favorite quote of all for this year is from Charles Dickens. I find myself saying it all the time. "It was the best of times, it was the worst of times." I've always loved that quote because it implied that even when things seem out of control, we can choose to find the good and be thankful for it. And I have to say, we here at the show have seen a lot of the good. We grew from 2 to 3 million downloads this year, thanks to you. We had struggles. We had issues with Google speakers, and no sooner had we gotten that under control, but we found we were under attack at our hosting provider. And as a result, some of you might not have gotten some of the Google speakers versions of our shows, yesterday's in particular. During the downtime, I hope to be able to do some work to bolster our defenses. But if you do miss the Google speakers version, we're on Apple, Spotify, YouTube. You can find us in a lot of places. On a personal note, I was thrilled to find that not only had my first novel been selling, but the audio version of Alyssa, A Tale of Quantum Kisses, and I'm sure you've heard about it this year, was an Audible bestseller. Now, some of you might know that, like a lot of techies, I'm a musician. I have a number of albums out. You can catch me at music.jimlove.com. But this year, I published my first novel and had my first gig as a narrator of an audiobook. And it's a bestseller on Audible. Who'da thunk it? There's been a lot to be thankful for, but mostly I'm thankful for you, our listeners. This podcast is a labor of love. Yeah, I'd love to say no pun intended, but it's obviously pun intended. But it's something that isn't always easy. But every time I've been feeling low or wondering if I'm getting through with the show or if it makes a difference, I'll get an email from one of you saying something kind, sharing an insight, or in the case of the book, it was you guys that made it a bestseller. And that was the best Christmas gift I could ever get. So our thanks to you is sincere, and although we don't make a lot of money from the podcast, Enough of you bought me a coffee or supported us, and we had some sponsors that came in, and we're going to take that and make a substantial donation to a local food bank in the name of our 2 podcasts and our audience. And next year, on the 5th of January, we'll come back with the podcasts, with our news site. Finally, a new news site. We think you're going to love it, and we'll be full of energy. In the meantime, enjoy the special holiday programs we're doing, and I'll be back in the newscaster role on January 5th. And before we go, we'd like to thank Meter, who has been a tremendous supporter of the show. They deliver full-stack networking infrastructure, wired, wireless, and cellular to leading enterprises. They've been a great partner to our show, and working with their other partners, Meter designs, deploys, and manages everything required to get performant, reliable, and secure connectivity in a space. They design the hardware, the firmware, build the software, manage deployments, run support. It's a single integrated solution that scales from branch offices, warehouses, and large campuses all the way to data centers. Book a demo with them. That'd be great. Meter.com/HTT. That's METER.com/HTT. I'm your host, Jim Love. May you have a comfortable Christmas, a happy Hanukkah, and a heavenly holiday.